Yeah.
All right, why don't you tell us a little bit about what we're going to talk about?
So basically we're going to start kind of from scratch a little bit because, like, again, new year, not new me. We're not going to do new me. We're going to do new home because,
there you go.
It's such a good, everybody's got their their New Year's resolutions of like wanting to save money or, buy a home, get out of the rent or figure out how to
upgrade or something like that. Right.
In that way. So we thought, January, let's just start it again.
Yep.
How to open. And it's going to be more of just, bits and pieces. And we'll kind of show you like a little bit of how to move forward and everything.
And what we try to do is we try to touch on things. I don't know if you have seen previous ones. We try to break them down and touch on things and not get too far in depth. But if you have questions or anything you want to ask or talk about, definitely we'll at the end, if you have questions, we'll answer those. And then again, keep an eye out for things in the future because we try to touch on breaking down different types of loans and different ways to do that. So
also let us know because we are very much into whatever you guys are interested in too, that you're like, hey, I saw something about this, and if we can find some more information and talk about it,
absolutely,
we're all about
it. And we try to, which we'll probably get into a little bit, is kind of add little bits of what's going on in the market, just a little bit. Some things like that. And what triggers rates and things. But we're going to get to that in a few more minutes.
So we're basically kind of go over like how to own a home in 2026. We're going to go through the path of going into home ownership, the buying process, which is great. We'll kind of touch on a little bit of FHA loan. We'll do a little bit of FHA loans today, and then like first-time home buyers, what it is, what incentives you can get, how it can help you. So I think this one will be
kind of geared a lot more towards first-time home buying. Although, it can be your second home, third home, anything you're getting ready for, because we are seeing that in the market that it is kind of shifting a little bit where we've got more people ready to buy, thinking about buying. One of the things, and we'll start talking about it now, interest rates and affordability. So that's one of the things that's now opening up. The president has said many things about mortgage bonds getting paid down, money like that. Whenever he talks about things like that, I mean, I could get into a big, broad thing with that, but what you need to remember is when he talks about mortgage bonds or investing money in that, that's when the market responds.
Yes.
And usually it responds hopefully favorably where rates start to come down. So that's why there's so much volatility. Rates for mortgages are not necessarily tied entirely to what the Federal Reserve does. They're tied to what the market does based on what the Federal Reserve does. So it's kind of a step, and all of that. But what's come out now is interest rates have definitely come down. They're the lowest they've been since 2022, I believe, 2021.
The infamous
COVID.
3%, my interest rate that I love dearly and will not be getting rid of anytime soon because we just love that rate and I can't say no to anything else at the moment.
Well, and again, and one of the things you have to remember as buying homes and all of that, interest rates, just because it's 6% or 7% does not mean that's a bad rate. It's whatever your affordability is, what we can get you into a program, if we can get you approved and get you qualified. And if it works for you, if it is a 6, 7, 8% rate, if it works and it helps you get into the house, it's not a bad thing. You do that. Sometimes we can refinance on the tail end. But one of the things you do have to keep in mind is it's probably, it's probably never going to get down to a 3% again.
I'll let you buy it down.
They're talking about it getting down to maybe 5.5% by the end of this year, which right now on an FHA loan, you can probably get 5.875, 6%. So we're not that far off. No. And back many years ago, people were buying houses at 10, 11, 12%.
Yeah.
So these are good rates. It's just a matter of what you're thinking about. And with the lower rates, it does help you qualify for more.
Yes.
So that's a cool thing.
With the rates, because I got this question yesterday of a gentleman asking why his rate was 7.5 and he showed us this whole long thing and said like I researched it that says that we're this. Also take into consideration those rates also are for single family homes. You could be buying a condo, you could be buying an investment home, which we're not talking about today, but those are also what goes into your interest rate, because if you are doing a condo, those are a little bit more risk, they're a little bit higher, but it's called
it's called layering of risk. And you got to remember, if you call a mortgage company and ask them, or a bank,
what the rate is,
what
right
your
this
rate
very
is,
second,
they're going to tell you a rate that's probably not attainable because they want your business or whatever. And again, your rate may be different than somebody else's. You may have credit issues and they don't. You may be putting little to no money down. They may be putting 20% or more down. So
there's many different factors that go into it.
It's not just a standard rate. And it doesn't mean you're getting, screwed or anything like that. It just means that there were different issues to your particular loan. Inventory right now. Challenges is some of the sellers still think their houses are worth more than they are, but it's becoming where they're coming down. It's a little more realistic. It's definitely still a bit of a buyer's market, so that's something you might want to grab quick. Because once rates really start, moving, and once the lay of the land as far as properties settle, it's not going to be a buyer's market anymore. So those are the things you have to think about, whether you want to wait or whether you want to get moving now, or what is your goal in that respect. And then preparation and timing of the market, as we were talking about. You want to, if you're thinking about looking for a home and buying within the next 3 to 6 months, now's a good time to get pre-qualified and get approved and pre-approved. And what we do here at Van Dyke, we've said it many, many times, we don't just pre-qualify you. You don't call us, give us information, and then we send you on your way. What we do is we actually take your application. It doesn't cost you anything. We do a short soft pull credit report, so it doesn't affect your credit in any way, doesn't show up as an inquiry, and then we collect your documents and we actually send you to underwriting. So you have a fully pre-approved loan. And
I don't stress that enough.
We can sit there until you find a house. And the pluses with that is if once you find your house, we can close it a lot quicker. We've closed loans in 2 weeks. I just got one done, took the application 2 weeks ago, and we're closing next Tuesday, only because she's going out of town. So if she were not going out of town, we'd probably be closing her in 2 weeks.
Right.
So so that's kind of cool.
Okay, so basically a step-by-step basis of how you're going to get to home ownership. Again, what we start with is your application. So that kind of gives us our credit, and what we do, how Dawn said, was what we do is our soft pull. So that gives us no inquiry. It's not going to hit your credit. It's not going to do anything, but it gives us an accurate idea of where you're at. Exactly.
And a framework.
It's almost like building a house, to be honest with you, is where we're like, hey, okay, here's what we got. Now what's going to go in the bedrooms? Okay, what do we have in our checking? Okay, awesome. What do we have in our savings? Okay, great. Are we getting a gift? Is somebody giving us money? Are we buying a home from somebody that we are now
that we're related to?
That we're getting equity, the gift of equity. Whole different
different things of doing that.
That's where we start going, okay, when is your time frame of buying a home? Is it in a couple of months? If it's in a couple of months and you're getting a gift from somebody, we'll either tell you, hey, put it in there now if they can, or we'll say, hey, we'll teach you how to deposit it into your bank account so it won't trigger anything, and it's already there.
And more documentation. And things.
It's already there, and we're set to go.
Yep.
So then we'll go into that pre-approval process. I got all your paperwork, and I'm going to send it straight to our transaction coordinator. She's going to go through it, and we're going to send it to processing. Now, again, we stress a lot on getting us the documents
as soon as
you can, because the faster you get them done. I literally, not even an hour ago, have a man almost pre-approved because I told him, I said, hey, if you get me those documents right when you give me the application, if I say it's a go, I can literally just send you right now. Kid you not, all of the documents were there, and I just went, oh my goodness, thank you so much. I was like, thank you so much. This helps me so much. And he goes, word for word, verbatim, said, this is so much less stressful than having to come back to you and come back to you and come back to you. And I said, that was the point. Thank you. I didn't have to say it. You kind of just took it on as like, this is what I'm telling you. And it was, and also, it was great.
And also get what we ask for, not what you think we need.
Yes.
What we exactly ask for. If we ask for your tax returns, we don't want your W-2 because maybe you've already given us your W-2.
Yep.
Your W-2 is not a tax return.
Yes,
your W-2 is an attachment to your tax return.
Yes, it is.
And the other thing, we get this all the time, bank statements. There's always a blank page at the end of the bank statement. That's for your notes.
It's not needed. Nope, it's needed. I promise you. If it says page 2 of 5, I need every single payment. Every single one. Every single one. Even the blank ones.
Yep. You may think it's silly, but unfortunately, that is the guideline that we have to follow.
We think it's silly, but don't worry. But unfortunately, those are the rules we have to follow by. But once, say we get you, so everything works out. We give you the go-ahead. We get you your pre-approval letter. Then we start working with your realtor. And we will personally call your realtor and say, hey, anytime you guys go out there and you guys are about to make an offer, call me. Don't do anything just yet. While you're preparing it, call us. So that way we can help you. Hey, can we get seller concessions? Hey, can we get the sellers to pay something? Hey, can we do this? I can look up that tax return. If it's local, I can look up that tax bill and say, hey, it was homesteaded. We can get you homesteaded right there. You're already in it. We can transfer it right there.
Absolutely.
So there's a lot of other processes of not just saying like, hey, they're liking this house, they're liking this house, they're liking this house. We work with them. Hey, call us when you're ready. Call us when you're ready to set up that purchase agreement, and we'll help you. We don't know how to write it all the way through. That's why we rely on our realtors. But we are very much helping them like, hey, can we do this? Can we do that? I can go up to this much. What can we put in there for you?
Exactly.
And then then you get that contract, we're getting ready to close. We're going to start doing our appraisals. We're going to get that insurance. We're going to get the title work. And then hopefully, sping, we're done. And you are now building and owning equity into a home. You are a homeowner at that rate.
That is cool. Yeah.
And it's, and we strive to do it within 30 days. So that's always my time card for me.
We do. And as I stated, we can close loans in less than 30 days. Sometimes it takes longer. Again, it just depends on the type of loan you're doing, as well as whether you get your stuff back to us in a timely manner, that kind of thing. So let's talk a little bit about some FHA loans. And I'm going to, again, kind of touch on just a little bit. FHA loans are government-backed loans. Doesn't mean the government's giving you the money. It's not. It's investors and all of that have the money. But these loans are backed where you're paying mortgage insurance on them, basically stating if you default, they're going to buy the loan, and then you now have a government loan that you owe money on, so you owe money to the government. So a lot of things with FHA is there's low down payments. You can do 3.5% down. Now, there are other reasons to do FHA loans. Sometimes you have 5 to 10% down, but you have a big credit issue. If you have more money to put down on an FHA loan, then we can probably get you approved even if you have issues with other things. So FHA loans are not just for first-time home buyers. They're not just for people who have no money to put down or very little money. It's many different reasons. Credit challenged, property challenged, mortgage insurance is on FHA is lower monthly than it is conventionally. And again, I'm going to only touch on this very quickly. Mortgage insurance does nothing for you as a buyer. It protects you, or protects the bank against you defaulting. So again, and you do have to have that anytime you put less than 20% down.
But that's on a conventional too. So
correct.
That's a big stigma I feel like a lot of people get with FHA, where they think it's
for
bottom
income
of the totem pole, no income, no nothing. No, it's not. It just it helps you. It's almost like a building like a building stone of
designed to help people,
designed to help
the borrowers
to actually get a home, and because everybody deserves a home, not just people with money.
Correct.
Everybody deserves a home.
Correct. And again, it's designed to help get you into the home. It's designed to do that, and whether you have money, whether you have credit issues, whatever the case may be, you don't have to be a first-time home buyer. No. Like I said, it does have to be your primary home, but it does not have to be your first home. So we have many people that do that.
I have many people that are going through divorces that I put them in FHA just because they need to get out, they need to get a new home, they need to, and that's another subject.
And the other thing too is
you're going from one home and I need to be in another home.
Right.
And it's
the guidelines are a little easier too.
They're a little bit more bendable because of situations and trying to get everybody into it.
And again, and here's the other thing: FHA rates are usually lower than conventional rates. Yes. So again,
sometimes if I'm like, hey, this is you're gonna be paying in mortgage insurance for a little bit, but do you want a lower rate at the moment? And then you can deal with that for a little bit, and then we can get. And that's where you kind of. Where I'm like, this is a better offer for you, and this is to help. You can always refi out of an FHA loan into a conventional. I always recommend it to people who are, anything. Yeah. Anything.
Well, and then the other thing too is if you put a little bit of money down and your house appreciates and all that, you can get rid of the mortgage insurance or whatever, that way. Pros and cons on FHA. Lower credit barriers, things like that. They are definitely more flexible with that. Conventional right now has just gotten rid of the fact that you don't need a minimum credit score, but
they will say no if they don't like it for some reason.
Well, for the whole thing. Yep. But you don't have to have a minimum credit score, but you do have to have trade lines. Yep. They require more trade lines. FHA only requires 2. So, again, easier credit. Yep. There's really... They say there's sort of a minimum credit score on FHA, but there's really not. The guidelines for FHA basically no lates in the last 12 months. So again, I have many people who call me and say, oh, my credit's bad, but I can probably guarantee you it's not as bad as you think it is.
Yep.
And many times, maybe you had lates last year in January. Well, guess what? If you haven't had any lates since then, you can qualify for an FHA loan now.
Yeah.
So again, their barriers for your credit much more lenient. As we were talking just now, competitive rates. Rates are generally lower on an FHA loan. Yep. So that's that's a plus. Some of the cons that are FHA has mortgage insurance on it no matter what, because again, as I said, there are different reasons why you're getting that loan, and you could have very bad credit, but you're putting 20% down, and we could get an approval on that loan. And you do have to have mortgage insurance because FHA is guaranteeing that. That is one of the cons. But then again, if you've got 20% down, but your credit is bad and you can't get approved for a conventional loan, and you can for an FHA, by all means take it.
Why not?
And if you're putting 20% down, your monthly mortgage insurance is much lower. It's still going to be there, but it's not going to be $200 and $300 a month or anything like that.
Yeah.
The other thing is there are loan limits. They are quite flexible now and quite high.
Yeah.
The new loan limit for this year is I believe 549,000, something like that. I don't quote me on it yet because they just came out and I've got to re-get it new ingrained in my head.
We memorize numbers for a year and then they change it again the next year and you're like, okay, hold on a second.
And they've gone up. I mean, shoot, I can remember when FHA loan limits here in Lee County were $89,000. That is just crazy. I mean, again, I'm dating myself, so it was many years ago. Yeah. But you were just a toddler then.
Yep, I was just little.
But yeah, so the loan limits now, a single family home is like $549,000. I mean, most people are not buying that as your first home. No. Most people are buying $300,000 or $400,000 houses, and now you can get FHA. So that's cool. But again, if you're looking at a $700,000 or $800,000 house, you're not going to qualify for an FHA loan. The really best scenarios, I guess, to really look at is if you are a first-time home buyer, 9 times out of 10, you're going to need an FHA loan because you either don't have a down payment or the whole thing's a gift, or you don't have credit, or you have problem credit or whatever. But that's kind of why it's usually geared towards first-time home buyers. And then limited savings, work histories. Conventional loans want you on the same job for 2 years. FHA wants you just to be employed continuously for 12 months or 2 years, excuse me. And you just have to document it. And if you have breaks, it's not a no-go. No. You just have to explain why the breaks were there.
Yeah,
so
we had,
again, a lot of different reasons for it.
We had a lady that I appreciate her so much, and she was the same thing. She said, I cannot get approved. I don't think I can. And I said, give me a second. And I looked at it, and all she did was she went from one job, took a break to be a stay-at-home parent, which, great. That's awesome. I love that for her. And then she decided to go back because, her daughter was in school now. She's like, I'm bored.
Need something to do.
I need something to do. So she went back. But it's the same line of work. So I said, perfect. There you go. And she was gone for 9 years. And they said, that's fine. Okay.
Yep.
FHA. They were like, that's fine. And we understand that she needs to be a stay-at-home parent. We understand all that. Yep. So that's
again
I like
more
I like the bending of the rules a little bit, or and it helps everybody in the everyday lives because not all of us have.
We're not all square pegs in a square hole.
Yep, that
a lot of us are round pegs trying to fit in a square hole.
Now,
I can guarantee you that.
What is a first-time home buyer? First question I get all the time is, I've already bought a home. I'm not a first-time home buyer. Pause. How long ago did you own that home? Do you still own that home?
Yeah.
I don't own that home anymore. Okay. When did you get rid of it? I got rid of it 4 years ago. You're officially now a first-time home buyer.
Yep.
You need 3 consecutive years between owning a home for you to be another first-time home buyer.
Being on title.
On title, too. Yes, on title. Well, for me, that's where I'm like, yeah, title, duh. But because also you can get, well, I own a home, I own an investment property. I don't live in it. It's not mine. I don't live in it. I'm a first-time home buyer. No, sir. No, you're not. You're on title. It's in my LLC. Doesn't matter.
You're the LLC owner.
Trace the LLC. You're still the owner. So just remember, 3 years on title. After that, if 3 years you're not on title from purchasing a home, you're a first-time home buyer.
If you have not owned a home or been on title for 3 years.
Right.
Yep. So that's nice because first-time home buyers can sometimes get extra credit for down payments and things, assistances.
A lot of it, and we'll kind of get into that. But a lot of like the myths that we get are I don't make this. I only make this much. Can I be a first-time home buyer? And
I make too much.
Or I make too much. Can I still be a first-time home buyer? Yes. That has nothing. Your income has nothing to do with you being a first-time being a first-time home buyer or not. It is legally, if you've had your title in your name 3 years. After 3 years, and that's all that you needed.
Because the income limits only come into play for assistance programs.
Yeah, and that's where kind of what we do. And then again, do I have to have perfect credit for a first-time home buyer? No, you don't. You don't
have to be perfect credit for anything.
Nobody has perfect credit, and if they do, please have them call me. I would love to know their secrets of getting perfect home credit. That'd be great. So basically, for your first-time home buyers, your success strategies. How are we going to achieve being a first-time home buyer, getting a home? Mm-hmm. Budgets. You really need to start looking at, what can I afford? If you're currently renting, see how much that is, see how comfortable you are, sit down. I do it on a monthly basis. My husband and I sit down on a monthly basis and we go, okay, here are our bills.
That's because they're weird. Just kidding.
Because we like to plan. I am a planner.
Just
have to my husband is the one that I love him dearly. He is the one who tends to spend a little bit out. But hey, I said I don't care if our bills are paid. What you do with whatever, that's fine. But we do. But we're able to do those things because we sit down and we go and we budget and we say, hey, we can do this, we can do this, we can do this. How much do we have left over? Enough? Perfect. That's great for me. So getting to know your budget is a good thing, because if you can say, hey, I can take this out to get a better mortgage, a higher payment, because if I take this out, I can afford more, I can put more towards my mortgage payment, and that could change what kind of house you're going to get as well.
Correct. One with a pool or without a pool.
Without a pool. Right. I prefer a pool.
And that's the thing too is, when you sit down with the way inflation has gone up and all of that, I mean, if you buy Starbucks, I mean, that's always such an easy one to look at. Mm-hmm. So many people go to Starbucks every day, at least once. Yep. Starbucks used to be what, $3 to $5? Now it's what, $5 to $10 on a good day? And I mean, and think about it. If you're paying $10 a day, that's $50 a week. That's $200 a month. $200 could be the difference between a $250,000 house and a $300,000 house, and that could be the difference between, again, 3-bedroom, 2-bath, or 3-bedroom, 2-bath and a pool. 3-bedroom, 4-bedroom. 2-bath. It could be
bigger yard.
Yep.
More acreage.
Different area. Maybe you don't want to buy in Lehigh. You really want to live in Cape Coral, but you can only afford in Lehigh. Mm-hmm. So, those are the things you think about. Mm-hmm. What can you take out? Now, we're not going to look at whether you buy Starbucks and all that. We don't care. We're going to qualify you based on your income. But these are things, as you're budgeting, that you have to look at as to what you can do away with in order to get what you really want.
I did that after our wedding because we didn't go into debt for it, but we used our credit cards because we were like, hey, we might as well, if we're going to pay these off, we might as well get the points and make money off of it. And that was one of them where my Starbucks was out the door. But I realized, I'm like, wow, I'm spending less money going to Starbucks. And I used to only go like maybe once a week, which was crazy. And I thought that was a lot. But I sat there and I went, okay, like, why don't I go get the instant Cafe Bustelo, the instant one? Oh my goodness, I have one scoop and I'm like zinging all day long. And that was just, and it's, I've had the same one for, gosh, almost 6 months. And I know, it's just crazy. And because I only have one coffee a day, I only have it's not only just relying on us to help you figure that out. Mm-hmm. We need your help of, hey,
what are you going to do?
Sit down
and
let's
figure where you have the money, because and the thing, we all look at groceries and all when we're going through, and as funny as when I go, I live by myself, so I don't make big meals. I try to break things up and, freeze it for, one person, whatever. They have the potatoes, the bakers, 2 for $5 or 3 sweet potato, 2 for whatever.
Yeah.
but I can get a bag of the same potato for $3.99.
Yeah.
Why am I buying 2 potatoes? And I mean, as silly as it is, it just hit me in the head the other day, and I went,
it does.
What am I doing?
That
you know?
It does.
And it's crazy. So those are things that you can do to budget and be ready to, figure out how much you want to buy and what's comfortable.
Yeah. And there's a lot of education and counseling programs that, especially with FHA, that sometimes they'll make you do it. They'll have you say, hey, you got to sign up for this class that you've got to go through, and you've got to look at it and go through the training. And honestly, some of those I'm like, that's great. I think it's great. I think anybody who owns a home should kind of go through it, whether you make all the kinds of money in the world or none, because it helps you also understand that your mortgage on your credit reports differently as it would a revolving line of credit or an installment
like
loan,
a car loan or something like that.
Again, I figured that one out too, and I was like, oh, that makes sense. Got it. And then also working with the right lender and a right realtor.
We always say we have so many people that will say, it's a for sale by owner, or we're going to do this. And then they want us to help write the contract.
I'm like,
we don't write contracts. We stay in our lane. We do that. And let me tell you, we know a bunch of good realtors, and we want you to work with the realtor. We want you to, get that person that has the knowledge. And in addition to that, that realtor is there to protect you. They're to protect you, with the house, if there's any inspection issues, title issues, that realtor is going to help you through the process and understand what you need to do. So
yeah, and we also
we are the right lender, just saying.
Yes, we are. But we also advocate for you. Like if we hear that you're saying like I don't like this one, I don't like this one doesn't do, we can actually tell them and say, hey, look, we've been hearing like this doesn't work for them. They don't like this one. Like you may just want to like go this. We don't tell any realtor what to do, but but we're a well-oiled circle machine. Where we're a machine where we want to get you, the realtor, and us, the lender, are trying to get you into that home, because
if we all work together,
we're going to get you a house.
The end product is
getting you in a home.
A home, yep.
And then planning for long-term affordability. And when I say that is, when you see a really nice house that's a really high, and you're like, I just love it because it's beautiful. Okay, let's also, again, but that goes back to budgeting, where you're like, that's great, but how much does that leave over for you for other things? Are you going to give up Starbucks entirely for this? Or are you going to want to introduce it back to you? Are you getting raises are you getting a raise every year? Are you getting bonuses every year? It's one of those that you don't want to set yourself up for failure. If you really, really like this house. Now, great. If you really, really like this house, are you ready to have this payment? Because this payment is not going to just
go away
or also lower unless you finance. It's going to be pretty much the same.
And it could go up because of taxes.
That's true.
And let me tell you,
be ready.
Taxes and insurances went crazy, and insurance, especially after Ian. Luckily, we have been seeing insurance rates come down, which is great and goes back to the affordability. Yep. Now is a good time in the affordability. But yeah, like you were saying, with you plan for long term, plan for, you don't want to be house poor, basically, where every bit of your money is going into this house that you just had to have
furniture,
and again, if you
stuff you want new fixtures,
you're gonna have to buy a lawnmower, unless you're going to pay somebody to take care of your lawn. Same idea, pools, that kind of stuff. And the thing you have to always remember, and especially if you're a first-time home buyer, maybe this isn't your forever home. Just get into one that you love, build equity, sell that house, and then buy the next one. You don't have to have the Taj Mahal on your first house.
As your first home.
You don't. Most people, or used to be, people bought a starter home, then you move up, then you move up. But so many people now, we live in a generation of, I want it all and I want it all now, right now. And sometimes that's just not feasible. You know?
My husband and I are in our first, I guess you would say our first.
It's your starter home.
It's our starter home, and I complain a little bit about it. I complain a lot about it. But I tell him to this day, I will probably cry the moment we leave this house because it was our starter home, and it's a little house. I love it. It's our house, but we put everything into it. But I can tell you right now, having the lower monthly payment of that really, really helps you, because instead of just jumping the gun of, I want this house and it's great and it's a high mortgage, you get a little lower one and it's great. It's exactly what we needed for 5 years.
Right.
And actually it's gotten us to this point where we can now say, do we want to rent this house or do we want to sell this house? Which is
because you're in a position where you
which
don't
I never
have to
thought
sell.
we would ever think to be in that. And so that's where I said, I'm like, it doesn't need to be long term. Always think ahead. Don't think of what you need right this very second.
That it has to be everything right this minute.
Yes. Yep. And I'm telling you, it will come. It will come.
Why don't you tell us a little bit about some buying incentives for first-time home buyers?
Oh, well, we got a lot. It depends. I mean, it always is more of like a local, depending on what you had. There are state ones. There are nationwide, nationwide assistance programs, but like a good one that I always loved going to is our first responders, is our hometown heroes. It's near and dear to our heart
because my daughter, her sister, is a paramedic, and we love that. You know,
we love the first responders. We love because they do the stuff that we can't, and that one I always do. But that one's a good one where I've always tell people it's where we've sometimes get people that don't really understand it very well, which is fine. This is why we're here. It's one of those, as an example, helps with a down payment, with your down payment.
And the rate a little bit.
But if you don't qualify for that, because also there's income limits on it. If you make too much, they're going to say, no, sorry, you make too much for it. We can't help on that one. I won't go too much into detail on that one. But if you don't qualify and I say, hey, but I can get you an FHA and you don't have a down payment, and I'm like, my hands are tied. I can't help you either way. So that's where people are tending to go, but I don't need a down payment. We need to show a little bit that you have, like that you could at least do it without it as well. Now, if you do qualify and you don't need the down payment and you will qualify for the hometown heroes, then it works out in that way. But we also try to tend to keep those in mind as well.
And we've got SHIP programs and HAP programs and
Home Possible,
Home Ready, and then there's some of those programs have down payment assistance on them. So we luckily here at Van Dyke, we have access to all of that, and we also have access to programs. If we're not approved with them yet, we can get them very easily because we do this so much. Yeah,
a lot.
Yep. Well, and then we've got some incentives that can help change your numbers, you know, the, FHA, some cost reduction things, buy downs, that'll help change your numbers at the beginning, sometime a permanent buy down, then a temporary buy down, but then it'll go up. But so a lot of the incentives and everything help with your numbers and all of that. So do some early research. That's why we say get pre-approved, get pre-qualified, because we can do the research for you. So that kind of brings us to the end. No questions? All right. Well, again, I'm Dawn Hall.
And I'm Mallory Fraser.
And we are your Mortgage Express team. So give us a call. Anytime you have somebody you want to talk to, you need to get pre-approved, anything you want to do, you give us a holler.
We'll figure it out.
Right? See you next month.
Bye.